So you are splitting the world into two parts, what's investable for you and what is not. Could you explain a little bit how you come about this?
Yeah, absolutely. So we fundamentally think that, there's sectors of the economy that are going to grow and thrive in this era, and there's sectors that won't. And so we typically speaking look at every single sector of the economy in collaboration with our sustainability experts. And we basically build a universe. We say that there's certain things that we could almost guarantee will grow, and everything we do is 10 years forward. So in 10 years forward, is your aircraft going to be heavier or lighter? In 10 years forward, will there be more surgeries in China to fix hips and knees or less? And so our entire world is fixated on what are the sectors that are going to win over the next decades.
Alex, could you give us some examples of these sectors that are going to win in the future?
Sure. So we really like cloud computing. So if you think about what used to happen before cloud computing, it was software on premise. So everything was stored in your office building. You would have these cupboards just full of servers and cables all over the place. That just doesn't really happen anymore. Companies, for cost reasons and for energy efficiency reasons, are moving more and more of their software and hardware capabilities into the cloud. So this leads us to look at the cloud players. So as an example, you've got Amazon with their Amazon Web Services, you've got Google's Google Cloud Partners, and then obviously you have Microsoft with Microsoft Azure. So that's where we think over the next 10 years is going to show some incredible growth, as we know that data just keeps on growing and growing and growing, and the people who are going to take the largest share of that are likely to be the biggest players.
Maybe looking away from tech as well, are there any other maybe not as fashionable or sexy or things that people think about that are also sustainable going forward?
Yeah, absolutely. I mean, we have a very significant investment in the healthcare sector as an example, and that's somewhere that for years, for decades, we've had no innovation. And suddenly we have innovation. So things like Alzheimer's, suddenly there's a drug coming onto the market. But one that we've maybe spent more time on recently is obesity drugs, where they're now using medicine that would typically be used for diabetic patients, but they're using it to control weight gain. And the world has a huge problem with obesity. And suddenly we're seeing drugs on the market that will specifically tackle that. And the second derivative of that statement is that means more people can have surgeries. Surgeries themselves are very risky. And so when you think about innovation in medical technology or in pharmaceutical, there's plenty going on in that space as well.
And maybe a few examples of things that hasn't worked so well, that people might think is sustainable going forward and hasn't completely worked in the investment sense?
Sure. So, not everything that's sustainable is a great investment. So what we often say to our clients is, what is great for the planet is often not great for investing. And a really good example of that would be parts of the renewable space. So the cost of solar has fallen by about 95% in the last 2 decades. This is absolutely amazing for everybody around the planet, because we can now all afford to buy solar and have it on our rooftops, and that makes us more efficient, and it can help us stop using things like coal. But from an equity perspective, that is almost the opposite of what we look for. So we look for quality businesses, companies that have sustainable competitive advantages, companies that can have pricing power and strong returns. In an environment where prices fall 95% over 20 years, that isn't the greatest investment environment. So those are the areas that we do look at from time to time, but so far they haven't been the best investments.
And to Alex's point, all of this solar and wind going into the grid, effectively solar and wind isn't always on. Okay, the wind blows at night and you get a lot of sun in the day, and this is obvious. But actually our investments have generally been more in grid resiliency. And this is the idea that when you cannot guarantee when power is coming in, you need to have a mechanism to control power demand. And what's making that more interesting recently is obviously the growth of AI and AI data centers, where for 20 years we haven't had load growth or electricity demand growth in the developed world, and suddenly we do. And so the challenges around solving that is exactly where we want to be investing, but specifically where the companies are very profitable and they have that 10-year perspective of being able to generate high returns.
So during COVID, we saw quite a few sustainable things taking place. Do you think some of them got overextended?
Yeah, I mean, there's absolutely no doubt that COVID was responded to with a big stimulus, particularly in the US and other markets. that stimulus went into the stock market, and what had become flavour of the day, if you like, was sustainable themes, and interest rates were very low. And so what you saw is a very strong performance that was actually very short term. And what I mean by that is Alex went out and bought 3 barbecues, I bought a Peloton exercise bike, and that's great in that 1 year, but what happens afterwards? So where does the money then flow to? And so what we've actually had with higher interest rates is people have been more discerning. And so we've had to be very careful as we've navigated that landscape. But again, always founding ourselves in what's going to be bigger in 10 years and why. And so valuations were extreme. They're now much more normalized. So actually, it's a lot easier now to put money to work than it had been in the last few years as interest rates came up.
If you take the Peloton example, so Peloton was obviously extremely popular as people were facing curfews all around the world. The shares went up considerably. The peak market cap of Peloton was about $49 billion in the early parts of 2021. That has now fallen back to $1.3 billion. So that is a decline of 98% over the last 3 years. So a great sustainable theme. It was very popular for a short space of time, but unfortunately it hasn't stood the test of time. And that is something that we're always very, very aware of.
And, we get to own 43 companies, right? We don't get to own a theme. And so stock picking has and always will be, in our opinion, the predictable driver of returns. And that's why we own so few names in a strategy like this.
So on your list of non-sustainable investment, you've got nitrogen. This is the key to a lot of fertilizer product in the world. So why do you see it as non-sustainable?
It really is needed. We've got billions and billions of people around the world who struggle to get adequate food. Nitrogen, as you say, is the fertilizer that helps things grow. Unfortunately, it's the overuse of nitrogen that is the problem. So about 30% of nitrogen that is sprayed through fertilizers onto crops gets taken in by the crop. The rest of it falls into the soil and into runoff. So when it rains, all of this nitrogen falls into the waterways. It takes all of the oxygen out of the water and it stops fish from growing. And it makes this water dead. So we do need nitrogen, but we need to use less of it. So the counter to using less nitrogen is to look at companies that have farming technology and technological devices, if you will, that help farmers identify which parts of the field actually need fertilizer rather than just blanket spraying an entire field. So farming technology companies are paving the way for farmers to use less nitrogen. This is great for the farmer because it makes them more efficient, their crops are better, and it also saves them an incredible amount of money.
We also spoke about COVID and COVID years, and now travel is back on. Travel and sustainable as a theme, or as an investment opportunity?
No, it's a really good and interesting sector that's very consistently grown. And if you look actually now, things like cruise ships are taking a lot of share. Now, for us, obviously, that's a very, very bad use of carbon, right? It's obvious. If you're on a cruise ship, you use an incredible amount of energy and you're emitting into the atmosphere. So for us, it's fairly obvious what we would exclude. I think what's interesting about travel and leisure is that in the old days, you would take a 2-week holiday, right? A lot of holidays were 2 weeks. And because of that, most of your energy is expended taking off and landing, actually. So that was easy. Now, unfortunately, the trend is to do city breaks and short-haul travel. And so the focus, if you like, on reducing emission is very much on that short-haul market. And where we would invest is where we're very much taking those emissions out. So the first generation is really just making an aircraft much, much lighter. The second generation will be things like sustainable fuel to go into that aircraft. And one day, which sounds ridiculous, which maybe not, is that aircraft is powered through hydrogen. So it's actually electrolyzed. It's actually electric power that jets the plane, if you like. And so every single sector has an angle within it that we're thinking could make the world an easier place to live in. And that's where we're focused.
It's interesting you mentioned travel and transport, because I think people would assume transport is not an industry you would invest in as a sustainable investor, but you do have some investment in these sectors, haven't you?
Yeah, and we're looking for the highest IRR, so the best way to reduce that emission. What we're not trying to do is exclude what we would call fringe sectors here. So yes, we exclude coal. That's obvious. It's not needed. We have an abundance of gas. Gas is maybe 45% of the same emission, but eventually we have to move on from gas to clean. And that's the transition we're in right now, because at this point, we're really not hitting any of our targets, which means that predicted global temperature rises are still much too high. So there's too much CO2 and other greenhouse gases going into the atmosphere. So any single solution to reduce that is something that we would look at.
So within transport, we like rails. So, all across America, freight is typically moved around by either rail or truck. Truck is incredibly inefficient and highly emittive. Long-haul rail can be, 25% of the CO2 emissions. So we know that things have to be moved around the world. What we want is to see those goods and services moved around in the most efficient way. The most efficient way is often by rail, so we are big supporters of the rail industry.